Good afternoon and welcome to Matrix, our last session for accounting 2011, and it was such a privilege for me to be with you. You're starting your mock matric exams very soon, and I'm hoping that these sessions really prepared you for your mock matric exams. You should have finished the syllabus by now, and you should actually be revising or even studying. Today we're going to do cash budgets, and cash budgets is one of those sections that could come in the exam. Some years it does, but in most cases it will always appear in the exam. It's a section that you just have to apply yourself in, and for the matric syllabus you have to analyze the cash budget and analyze the projected income statement. It's very unusual that they'll ask you to actually draw up a cash budget or to draw up a projected income statement. So they give you the cash budget and you have to answer questions pertaining to it. I just want to go over just a few basic rules or understanding of the cash budget, and then from there we're going to try and do 3 exercises today. I didn't prepare a PowerPoint today because I thought that today we're going to try and cover as much work as possible, and I'm also going to try and answer as many questions as possible. Let me welcome you again, and let's just look at what the cash budget is and what the projected income statement is. So the cash budget is cash items only. In other words, it's either cash received and cash paid that you look at. So you look at the cash received and cash paid for that budgeted period. Also know that a budget is for the future. Okay, so the budgeted period did not happen yet. It is future. So if this is your financial year, and let's say you are here at the end of the year, let's say your end of year is December, and your budgeted period is the first 3 months, you are actually here and you're budgeting for something that's still going to happen. So you're saying in the cash budget that I'm going to receive a certain amount of money and I'm going to pay a certain amount of money in that period. Budgets are drawn up. It's very important to draw up a budget because the organization needs to know where they're going towards, and they also need to plan. For instance, if the organization plans that in February, let's say they're in December, and in February of that next year they're going to buy more equipment, then they have to look at whether they can finance the equipment with the money that's come in, or whether they'll have to make a loan to finance that equipment. So your budget is looking forward to see whether you'll be able to meet the criteria for the budget. Well, the cash budget, if I'm going to buy equipment cash, will I have enough cash in that month to be able to pay for the equipment? So that's what budgeting looks at. So it's futuristic. In your budget, you get actual information. In other words, the actual information already took place. It already has happened. Your budgeted information is still going to happen. That is what you really need to understand when it comes to the cash budget. Today we're going to look at 3 exercises, and I'm not going to start with 9.1. We're going to start with 9.3. So in your question books, I want you to go to page 70, page 70 of your question books, and we're going to look at activity 9.3, and in your answer books, the answer for that activity is on page 84. So please go to those. I see there's quite a few. There's two visitors, and Senajanga High School, welcome to today's session. If there are other schools out there that haven't logged in yet, maybe you want to log in. So let's look at activity 70. On this activity, okay, if you can just go to this activity, please. It's the activity for Africa Ceramics. So you've got your books open on page 70 and you're going to read with me. The first thing that they want you to do is complete a debtors collection schedule. Okay, debtors collection schedule. Now the debtors collection schedule is how are debtors going to pay me? Remember I said a budget is futuristic. So the schedule is how are debtors going to pay me in the future. If we look on page 71, there we have page 71, And here you have expected collections from debtors. That is important to draw up the debtors collection schedule. Without this information, you won't be able to draw up the debtors collection schedule. So question 1 is draw up the debtors collection schedule. Here's the information. Let's read the information and try and make sense of it before we even look at the debtors collection schedule. They say 75% of all sales are expected to be on credit. So 75% is on credit, so that means 25% is cash, but we want credit sales. It's important to have credit sales. So 75% of total sales is credit sales. 30% of debtors, okay, 30% settle when? Settle accounts during the transaction month. That's very important to remember. 30% settle during the transaction month. And then they get a 4% discount. So we first work out the 30%, then we're going to minus the 4%. We're going to do the activity now. We're just looking at, okay? So in the month that the sale is made, 30% of debtors pay in that month. And then they get a 4% discount. 50% settle in the following month. So 50% in the month after the sale, and then 18% in the third month. Okay, so that's the first month, second month, third month. Now, 2% must be written off. That we simply ignore when it comes to the cash budget. Learners, they will always put this into the question. You simply ignore it because your cash budget will only have cash items, and bad debts is a non-cash item. So you'll never work out the 2%. So let's look at our activity. Okay, bearing in mind what I've just written down now, there we go. Our month is months, August, September, October, November, December. Our budgeted month is October, November, December. So that period there is our budgeted month, and that period there is our actual month. That already took place, that is still going to take place. Okay, that there is the 75% credit sales. They tell you that is the 75% credit sales. Now they've already given you some information, and learners, if they give you information and you're not sure how to work things out, use this as a guideline. So you almost use this as your testing tool to see, am I on the right track? And if you get these amounts, then you know that you're on the right track. So also, in an exam, they will give you the correct information. If they give you the months, you must know that you must use all this information. Okay, I'm going to show you how they got to that amounts in a minute so that you can see, okay, that is how I worked it out. All you need to know is when they give you these months, they're not going to give you unnecessary months. You need to use all those months. So let's look at all the information I've given you now. Okay, we're going to put it together. The debtors collection schedule is going to be drawn up now. I'm going to explain to you quickly how I draw it up and what I look for, and then we're going to plot in the information. It's not a question that you're going to spend too much time on. So learners, if you actually know how to work it out and you get these calculations quickly, they never mark your calculations, but you need to work it out independently and then plot it onto your schedule. So let's go back, and you need a piece of paper perhaps, and you're going to just I'll show you how to draw it. So remember, I say to you, you're going to use all your months: August, September, October, November, and December. Okay, this is just my rough calculations. I know that I'm collecting over 3 months. So every month is going, every amount or every sale is going to be collected over 3 months. Remember, they said 30% in the month of the sale, 50% in the month following the sale, and then 18% in the month after that. So you must now draw in that information. 30%, remember, in the month of the sale, and they get 4% discount after you worked out the 30%. 50% in the month following the sale, and then 18% after that. But now remember, we're not going to use all this information. So, in August, I'm going to have credit sales. I'm going to collect 30% in August, 50% in September, and 18% in October. In September, I'm going to collect 30% in September, the same month. Remember, you sell that month, you collect 30% that month. You sell that month, you collect 30% that month. Then September, October, November, August, September, October, November, we're getting somewhere. Then in October, I'm going to collect 30% minus 4. In November, 50, and December, 18. Okay, I'm just plotting this quickly just to show you how this works out. In November, 30% minus 4. In December, 50. And in Jan, I'm going to collect 18. Again, in December, 30% minus 40. In Jan, I'm going to collect 50. And in Feb, I'm going to collect 18. So this is really what all of that means, what that means. 30% in the same month. Okay, 30% in the same month, right? 50% a month later, 50% a month later, and then 80% 2 months afterwards. How do I know? Because I'm collecting over 3 months. Right, now, I'll slow down. Shane Thompson asks me to slow down. Shane, what we're doing is the debtors collection, and I'm showing them, I'm breaking down my information. If I can just show you, Shane, this is what I'm using. Okay, I'm using this. I'm using the 30, the 50, and the 18 that they told me debtors are going to be collected over these months. Okay, so I'm using that information and I'm getting an idea. They said 30% settle during the transaction month. That is my starting point. So if 30% settle during the transaction month, then this is what I do. If my months are, remember I said to you earlier on, use all the months they give you. They give you August, they give you September, they give you October, they give you November, they give you December. Now, if 30% is in the same month, then August will start with August. Follow on September, October. Then September will start with September because it's in the same month. Okay. Is that fine, Shane? And have I slowed down? Right. Now, I don't need all this information. I just plotted this to show you how to lay it out. And learners, if you need to do this quickly, then do this quickly because this is the most accurate way to really work it out. What I've noticed in marking matric and in marking my own learner scripts is that they often are out by a month. They don't read the information, so when they do their calculations, they're basing it on the wrong month. And so they're putting the amounts in the wrong month, which makes their debtors collection schedule wrong. So you actually have to be very accurate. Okay, let's go back to our calculation. What do I mean by we don't need all the information? Remember that our budgeted months is October, November, and December. I only want information applicable to October, November, and December. I don't want August, that's of the past. I don't want September, that's also of the past. Okay, so I'm only going to now concentrate on information that I need. Okay, I don't need September, but I need October and I need November. I need October, November, and December. Okay, I need November, December, I don't need Jan. I need December, I don't need Jan, and I don't need Feb. What am I saying by I don't need it? In other words, that is not my budgeted period. My budgeted period is October, November, December. Okay, so now I've used all my months. I've worked out according to what they told me. 30% in the same month, 50% the month following, and 18% after that. So I've got that. If your amounts are collected over 3 months, to each month you're going to have 3 arrows, okay, because you're going to collect it over 3 months. Now, all I must do is I must calculate the amounts, okay. Remember, let's go back to that, 30, 50, 18. 18% of August sales will be collected in October. Okay, 18% of August sales will be collected in October. Okay, here I go again, 30, 50. 50% and 18. 50% of September sales will be collected in October, and 18% of September sales will be collected in November. I need all of that, so now I go 30, but I know that it's also minus 4%. I mustn't forget the minus 4%. Okay, and then 50, and then 18. So that's how I plot my information. So when I do my calculations, it's quite quick. Then, again, I always start with 30% minus 4. It's in the same month. In November, in the same month, I'm going to get 30 minus 4. Okay. Then, in December, 50. And I don't need Jan, so I'm not even going to work that out. And then in December, I'm going to get 30% minus 4%. And if you have any questions, please, learners, at this point, this is my layout. So now what I'm going to do is I'm going to use this information on my calculator to calculate. This layout was just for me to give you an idea as to how they get that information. Now, please note, learners, for every exercise, there's going to be a different layout. Sometimes they say a certain percentage is collected in the same month. So if you are busy with August, then you start with August. Sometimes they say a certain percentage is going to be collected in the month following the sale. So if you start in August, in other words, if the sale's in August, then you're only collecting in September. So please, you must be aware of that. Am I collecting in the same month, or am I collecting, is my first collection a month later? If you're collecting over 3 months, you'll have 3 arrows or 3 little lines, I would say, next to each month. If you're collecting over 2 months, you're only going to have 2 lines. So the first thing you must remember, when is my first collection? The second thing you must remember is over how many months am I collecting? And I promise you, they will never give you too much information. They will always give you the right starting point or the right amount of months to use. So you always use the months that's given, because the months that's given will be applicable to that budgeted period. So in August, some of August sales are still going to come in October. So that's why they gave you August. Right. I'm hoping that you're with me. There are no questions yet. So now let's go to our cash budget. It's on page 70. The answer is there, but I'm going to fill it in on here. You can fill in on your answer book. Okay, I'm going to fill it in right here because there's enough space. Okay. Now remember, there's August, September, October, November. On my little sheet, I said that 18% of my August sales will come in October. So let's just test if that's right. That's the 18%. 360,000, that is my credit sales, times 18%. And there we go. It is, if you look at my calculator, there we have it, 64,800. So that is correct. That is the 18% of my August sales that's coming in October. So can you see my calculations correct? Now, no more August sales is coming in. So I'm not going to have anything from August in November because that's the last collection, August. September, on my sheet I said that 50% will come in October. Okay, you can see that 50%, 540,000. Try and get my calculator on. 540,000 times 50% is 270,000. So there's my 50% of September sales that's coming in October. And then another 18% is coming in November, remember you always end off with an 18%. So 540,000 times 18%, 97,200. So in this block, you're going to write 97,200. 97,200. Okay, so that's my 50. So that's 50, 18. In October, okay, remember October, for October, let's just check how they got that amount. Let's just see if that amount was worked out correctly. October sales is 450,000. So, 450,000. Let's punch that in. 450,000 on my calculator times 30% is 135,000. But remember, when they pay the 30%, they qualify for a 4% discount. Now I say times 96%, 129,600. So that is the 30% of people who pay, and of the 30%, they get a 4% discount. So you can't work out 450,000 times 26%. No, you first say 450,000 times 30% times 96%. Why did I use 96%? Because 100 minus 4 gives me 96. So I'm only going to get in 96% of the 135,000. So that is correct. So that's my 30%. 50% comes in a month later. So now it's 450,000 times 50%. That's 225,000. 225,000, that goes in there, 225,000. Okay, that's the 50% of the 450, and then 18% comes in here. 18%. So now I go again. 450,000. 450,000 times 18%, 81,000. So 81,000 goes in there. Okay, are we getting the hang of it now? And I'm really copying it down from my calculation. My calculation is just for me to get an idea. Then for November, in November, also don't put the stuff in the wrong column. For November, in November, I'm going to get in 30% minus 4%. So now I go again. 420,000 times 30% times 96%. 120,960. 120,960 goes in the November column for November. Okay, there we go on my calculator. 120,960. So that's my 30%. 50% of that comes in there. So 420,000 times 50% gives me 210,000. Let's put it there. 210,000. Okay, there's 210,000. Let's write it in. So 50% of November sales comes in December. That's the 50%. And I don't need January. I don't have January, so I can't go further now. And then December, can you see there? December, again, it's 420,000. I'm going to get the same amount I'll show you. 420,000. 30% of that sales comes in there, and they qualify for a 4% discount. So let's do it again. 420,000 times 30% times 96%. 120,960 goes in there. I just want to write it in neater so that you can see. And learners, all you now have to do is add the columns, and that is your debtors collection. Okay, let me just write it in neater for you. Here's your answer book on page 84, your answer book, and we're just going to write it in neater. If you can follow me, 97,200 goes in there, 225,000 goes in there, 120,960 goes in there, 81,000 goes in there, 210,000 and 120,960. All you now must do is you need to add your columns, plus 225, plus 97,200. That gives you 443,160. 210 plus 129.60, 411,960. And that is your debtors collection schedule. Thank you so much. Mannenberg High says I must work faster because they are done. Well done, Mannenberg High. So it just means that you know your debtors collection schedule well, and I'm very, very glad for that. Okay. Learners, what I want to do is I want to leave the rest of the questions for now, okay? Because we're busy with debtors collection schedule, so I want to do another question with debtors collection schedule and creditors. So we're just kind of staying with the same sort of work, and then we're going to go and answer some questions. I want you to go to page 66 in your books, page 66, okay? Page 66 in your books, and it is 9.1. 9.1 says we must refer to the cash budget and as well as the additional information, and we must calculate the figures labeled A to E. So let's go to our cash budget. Here we are, our cash budget. I'm hoping that you're all there. You're all there on page 68. Or 66, sorry, and 67. Page 67, and there's your cash budget. There's A, there's C, okay? Further down, there's B, there's D, and there's E. So, if you look at what they're asking for, here they're asking for cash sales. So they want November's cash sales. Then they want debtors collection, and they want November's debtors collection. So we're going to look at information pertaining to that. Then they want cash purchase of trading stock. And then they want payments to creditors. Okay, so seeing that we're busy with the debtors collection, I just want to say cash is immediate. What do I mean by that? When you're looking at cash, you look at cash in that month. So you look at the cash in that month. So let's work out A first. Okay, so we're going to work out A, which is cash. And then I also want to work out C. I first want to work out A, and then I want to work out C together. And then I want to work out B and D together. Okay. Here they say total sales. Okay, total sales. Now, total sales is both cash and credit. Okay, 20% of total sales is on credit. And so that means 80% is cash. If 20% is credit, that means 80% is cash. If cash is immediate and you must work out cash sales for November, then you use November's November's total sales to work out the 80%. Because remember I said to you, cash is immediate. So you take 220,000, which is the total sales for November. You only want 80% of that. So the total sales for November, 80% is cash and 80% will come in November because cash is immediate. Okay? 220 times 80%, 176,000. So your answer for A is 176,000. You put it in next to A. Right. So sales in that month will be collected in that month because cash is immediate. It's not deferred like debtors. Debtors you collect, you sell now, you collect the money over a period of time. Cash you sell now, you get your money in now. So just remember that. Don't forget that. Okay. Let's look at C. C, I want debtors collection for November. What's the first thing I must work out? I must work out how debtors pay. I don't know what information to use here. Okay, so I need to first work out how do debtors pay. So I go to my debtors collection. Debtors pay their accounts on page 67. It says, debtors are expected to pay their accounts as follows. Okay, And Shanae Jacobs is again on top of it, and she got 176,000 for that. Well done, Shanae. 70% pay in the month following the sale. So, if I sell in August, I'm not going to get my first payment, my 70% in August. I'm only going to get it in September. Remember, that's what I spoke about earlier on. And then 28% 2 months following. I want November's amount. Okay, I want November's amount. So if I'm going to collect my money over 2 months, if that is going to be collected over 2 months, then I must go 2 months back. So I must go past October, I must go to September. Okay. So I take my September 200,000, that is total sales. If someone can work it out, I'll check if you got it right. That's September total sales. Of that, 20% is credit. Okay? Times 20%. So my credit sales for September credit sales is 40,000. How is that 40,000 paid back? 40,000 is paid back over 2 months, okay? In September, the first 70% is going to come in October, and then the next in November. Okay, remember, I don't start with September now because I'm only going to get the money in the month later. So my first 70% is coming in October, and then I only get in the rest, which is 28%, in November, and I ignore bad debts. Then I must go to, so that's for September, okay? Now I must go to November's credit sales. So I take November's amount. I'm waiting for people to work faster than me. So I got September, I go to October. 180,000 was my total sales in October. Times that by 20% to get my credit sales in October. I want October's credit sales. I don't want total sales. So I go 180,000 times that by 20% to get credit sales, 36,000. So that 36,000 for October, I'm getting over 2 months. October, I'm getting 70% in November, and then December, I'm getting the other 28%. So what do I want? I want November and November. Okay, so I want that amount, 28%, which is going to come in November, and I want that amount, 70% from October, which is going to come in November. So let me work that out. I take 40,000 times that by 28%, and that is 11,200. That's going to come in November from September, and then I take 36,000. And I times that by 70%, and that's 25,200. That's going to come in November. I add the two together, plus 11,200, and I get 36,400, and that is my answer for C, 36,400. So let's just write it in on our pages. Okay, that's 176,000 that goes in there. And then also 36,400 that goes in there. And as I can see, no one got it. And I'm sure you got it. You probably just didn't communicate with me. 36,400. If there's any questions regarding that, I will gladly answer those questions. So 36,400. The thing is with the debtors collection schedule, you actually have to map what you're doing, and remember, if I'm collecting over 2 months, I must go 2 months back. If I'm collecting over 3 months from where I am, I must go 3 months back. And so that's how you can work it out. And also remember that they usually give you all the information. Okay, let's work out D. D, they want cash purchase of trading stock, B, and then D, they want payments to creditors. So they first want cash purchase of trading stock, payments to creditors. Okay, here we go. Let's see what they say. Someone said yes, Shanae Jacobs said yes, she did get it, and I knew that Shanae would get it. Well done, Shanae. They said here that 65% of all stock is bought on credit. You must remember that. Bought on credit means credit purchases, okay? And it also means that you can link with payments to credit. So bought on payments to creditors. Bought on credit, in other words, you're buying from a creditor, so you're going to have to pay the creditor back. So that is the information you use for payments to creditors. If 65% is bought on credit, then the other 35% is cash. Remember that. A fixed level of trading stock on hand is maintained throughout the year and is replaced on a monthly basis. Let me just discuss that again. Let's read it again. A fixed level of trading stock on hand is maintained throughout the year through replacement on a monthly basis. Right. Let me just explain that quickly. Learners, if this is your trading stock account, okay, that's your trading stock account, it is an asset with a debit balance. I'm just going to assume, let's assume your debtors have a balance of your trading stock has a balance of 30,000. Okay? It says a fixed level of stock is maintained. So that means that your opening balance equals your closing balance. That's what a fixed level of trading stock means. Your opening balance equals your closing balance. Then they say that it is maintained throughout the year and they replace stock on a monthly basis. It means that if your cost of sales is a certain amount, let's say 176,000, then your purchases, whether it's cash or credit, will also be 176,000. Okay, so that's your purchases. So when they say a fixed level is maintained, it means that purchases equals cost of sales. So when they give you cost of sales, you know that you must use that for your purchases. Okay, but now remember that purchases is cash and credit. And your credit is payments to creditors. So that is the link that you must make. Because in this exercise, just show the exercise again, they give you cost of sales. They don't give you purchases. Okay, so that is the catch here. I've seen this come in many exam papers, so learners, you must just be aware of that. So let's work out B, which is October's. They want B, which is October's cash, the cash purchases. So you must use that amount. Okay, for B, you use 144,000 because cash is immediate. So I say for B, 144,000 times that is my total purchases. Okay, I want cash. If 65% is credit, then 35% will be cash, and 144 times 35%, 50,400 is my B, which is my cash purchase during October. If I want my D, which is payments to creditors, okay, now I need to see how do creditors pay back. And by number 3 on page 67, they say creditors are paid in full in the month following the purchase. Creditors are paid in full in the month following the purchase. Now, if they buy in 1 month, they settle the next month. So if I want October's payments to creditors, that means I must go 1 month back. So I must go to, you are so right, September. Okay, so my September is 160,000. That is my total cost of sales there, and which is my total purchases. Then I work out 65% of that times 65%, which is 104,000, but it doesn't stop there because they say they qualify for a 5% discount. So I say 104,000 times 95%, because I want to take the 5 away. I only want to work out the money I'm going to get, times 95%, 98,800. So we fill in, that there is B, that there is D. Okay, let's fill it in. 50,400 and 98,800. So that is how you work it out. Very important, learners. Very important to know. E, They didn't give you these amounts and you don't have to work it out. Okay, for E, you only need this information here. What you need to know is that my closing balance in the 1 month becomes my opening balance in the next month. So that's 7795. Okay, I just take 18,855 minus. Anything in brackets means that it's a negative. You take it away, it's a minus. Minus 7795, and I get 11,060. That's 11,060. 11,060, I said that minus that to give me E. Learners, we've done a lot of... Shane asks, what is budgets all about? Shane, any company must budget for the future. In other words, they must look at what they are going to either spend, what they are going to receive. So budgets are futuristic. They don't look at the now. Remember, your accounting records are historic. You're looking back in time. Your budgets are futuristic. You're looking forward in time and you're saying, this is what my sales are going to be. This is what my cost of sales is going to be. This is what my receipts is going to be. And you plan. And it's not thumbsuck, because what they do is they look at past information and they base their past information and they say, okay, this is what we are going to do. And they put all sorts of mechanisms in place. For instance, I'm going to give you an example. If a company wants to increase their sales, what they'll do is they will plan or budget for budget to spend more on advertising. So they'll say over the next 3 months, we're going to put aside 40,000 Rand over the next 3 months for advertising. If we advertise thoroughly, our sales should increase. And because they put in a budget for advertising, they say sales should increase, so we predict that our sales are going to be X, Y, and Z. Another example of budgets is, let's say a company experienced huge losses, stock losses in the past year. Lots of theft took place. They will budget to spend more on security. They will budget to spend more on mechanisms just to decrease theft. So they won't just look at a situation and say, oh, this is a situation, we can't do anything about it. They will actually do something about it and build in money so that they can budget for it. Companies then also know if we are going to be spending more on advertising, we need to make that money available. If we are going to be buying new equipment, we need to make that money available. Nothing must be incidental in a company. Everything must be planned and everything must be foreseen. So that's really what budgets are about. I really hope that I answered your question, Shane. There are questions in the paper that says, why is it important for a company to draw up a cash budget, or why is it important for a company to budget? And your answer is simple, so that they can plan for the future, so that they don't, let's say they want to spend money on staff development and they don't have the money available. They can go to the bank or they can open up an overdraft, so they can make money available for the future if they say, this is what we want to do in the future. And it's almost like our personal lives. You know, we mustn't get our salary and then spend it. We must budget and say, if I'm going to be getting 20,000 Rand a month, how am I going to spend that money? But a company's budget is a bit different in that they plan for the future. There's some really, really nice questions that I want to go through. I think we still have some time. Let's just look at this one here. Okay, 9.5. 9.1.5. Let's look at this one. It's on page 66, 9.1. These are the sorts of questions, matrix, that they will ask you. Okay. It says at the end of October 2008, you compare the actual figures. Okay, this is what you actually spent for advertising with the budgeted figures. So sometime earlier on in the year, you budgeted to spend 2,000 Rand on advertising, but you only actually spent 600 Rand. Provide 1 point of advice, okay, to Mrs. Reddy in this respect. If you look at, now remember, advertising is directly linked to sales. So, if I look at my actual amount that I spent on advertising during October, and I look at my sales during October, I can see that my sales have dropped. Okay, I sold less, and suddenly in November, I sold more. But during that month, because I cut on my advertising budget, I made less sales. And that's very, very dangerous for any business. A business won't want to be in that situation. So advertising directly linked to sales. If advertising is low, sales will also be low. So that is what you look at. And in this sort of question, they want to know whether you can make links between one expenditure and another income. So advertising is linked to your sales. What else is also linked to sales is staffing. If you have fewer staff, then you'll perhaps have fewer sales, unless the staff really work hard. But usually, if you cut on your staff, let's say you have 10 sales staff in 1 month and your sales are high, and suddenly you cut your staff, you say, no, you don't need them for that month. And the next month you have 5 staff members and your sales are low, you can say that there's a direct correlation. Let's look at another last question. Okay, I want to look at 9.1.4. Also a very important question that always crops up. Let's look at 9.1.4. It says, the sales assistant has complained to Mrs. Reddy about her proposed salary increase. Give one opinion to support, one argument to support her opinion. Give one argument against her opinion. So, let's look then at the sales assistant's salary. Okay, here we have salary, sales assistant, salary, shop manager. Always compare salaries. The sales assistant is going to earn 5,000 in October according to the cash budget, and then the sales assistant will get an increase. Now remember the question, the sales assistant complained. So why is the sales assistant complaining? If you look at the amount of increase that the sales assistant got is 125 Rand a month. If you want to work that out as a percentage, okay, 125 divided by 5,000. She only got 2.5% increase. So I took 125, I divided it by the previous amount to work out what percentage increase she got. 2.5% increase. If you look at the shop manager, 13680 minus 12,000, got 1,680 Rand increase. Divide that by 12,000, 14% increase. So the sales assistant will be unhappy because the manager got a higher percentage than the shop assistant, okay, or the sales assistant. And remember, if you look at inflation, you can't give someone a 2% increase. It has to be at least, I would say inflation is about 5%. And remember this matrix, you need to know what inflation is, especially when it comes to these sorts of questions. People need to get inflationary related increases. So 2.5% is way low percentage. Way lower than inflation. So it obviously the sales assistant will be unhappy. It's just a question I want to answer. It says, what item that appears on the budget do not appear, on the cash budget does not appear in the projected income statement? Just know that your projected income statement shows incomes and expenses. So things like drawings won't be there, capital won't be in the projected income statement, but will be on the cash budget. Drawings won't be on the projected income statement, but will be in the cash budget. Capital, if the owner puts in more capital, will be in the cash budget, not in the projected income statement. So it's only incomes and expenses that will be in the projected income statement. It'll be any item of money received or money paid that'll go in the cash budget. What items won't appear on the cash budget? Non-cash items. Bad debts, depreciation won't appear on the cash budget, and drawings of trading stock won't appear on the cash budget. So all money-related items will appear if you're receiving money for something or paying money for something on the cash budget. What won't appear in the projected income statement? Things like drawings, things like capital, the purchase of equipment, the purchase of vehicles, purchase of landing buildings, fixed deposits, because they're not incomes, they're not expenses. So assets and liabilities won't be in the projected income statement. Non-cash items won't be in the cash budget. And that's important to know, matrix. And our time has run out. And I'm so glad that people asked questions today. They're interacting with the work. It's a really nice section. My advice, matrix, I gave you the same advice in June. Start the questions you know best. Start that first. I would like to say good luck for your exam. All the Muslim students have a very good Eid, and matrics study hard. Thank you so much. Bye-bye.